Welcome to Cryptos 101. Dr. Daniel Daves here. I would like to take you into class number 5 today and show you an anomaly that happens in the markets over and over again. In our last discussion, we talked about Fibonacci, the rhythm of God, and divine rhythm that takes place whenever mankind starts trading, whenever mankind does anything. Let's take a look, first of all, right before we jump into this anomaly. I do want to show you a technical chart. This is the US dollar as of today, the 26th of January, 2018. Back in about August, September, I started giving warning signs that the US dollar was going to take a 10%, at least was wanting to take a 10% run down. How did I do that? Well, this is the dollar from back in 2015, 16, 17, and 18. And as the dollar ran up here, it formed, and we had a low, and we formed an upside down cup and handle. Now, if you know anything about cup and handle plays, a cup is a big fall followed by a big buyback and then a little retracement back, and then if that handle, there's the cup and the handle, if it breaks to the upside, the way you measure that is you measure the depth of the cup, you come up to the top, draw a technical line, and that's where that market is indicating it wants to go. It doesn't always do it, but it's highly, highly reliable. And that's the power of technical trading and the rhythm of God with men, because men get an idea in their mind where they want to go and where they want to take their profits to, and you can pretty well track where those big guys and big players are planning to take it. So that is the dollar. Just to let you know, back in August, September, I started calling because it started falling under the line, right? I started saying the dollar is indeed wanting to take a move down all the way. Right now, right today it's at 88. It was up there at the 92 mark, and it's wanting to come down to 80, which means inflation. Bread, milk, and eggs, gasoline, everything, cost of living goes up. Prepare accordingly. Okay, so as this thing started telling, it started coming back, and then the naysayers were saying, see, we got a rally. And I'm thinking, yeah, you got a rally right into the handle. Hello. And, of course, as you can see, let me bring this in a little bit closer. We have just got a solid drop-off. Even in the last couple of days, it just opened lower, fell. It's falling, falling, falling. Not a good day for the dollar, but it can be tracked. And I've just learned over the years to look at the US dollar chart and plan accordingly. Gold, silver, precious metals, properties, getting into debt, getting out of debt, all kinds of things change when your dollar is failing. So, just a heads up on that. Okay, let's take a look here today. I'm going to show you some anomalies that are taking place. Here's a little watch list I've got. I love looking at the cryptos in the beginning, and as I come on down, I look at the dollar, look at the S&P 500, the Dow Jones, NASDAQ. I like to look at gold, silver, copper, and then we get into some different stocks. Okay, that's just me. There are thousands and thousands of stocks out there that you can follow and watch. It really does not matter to me. We can choose one, choose any, and I will show you divine rhythm. Now, I'll show you when the heartbeat gets off. Let's just look at Bitcoin here for a second. Okay, and let me just take everything off of here. Let's see, take all of my little drawings off. All right. And right now, so this was Bitcoin in 2017, the massive run-up, and subsequently now falling back, falling back, falling back. How far do we go? We talked about the Fibonacci lines, I believe, in the last session. 7,500, 10,000, and 12,500 are the three lines. Well, we're already kind of we're testing over and over and over to the 10,000, and I don't see any great big buyers coming in here. There's no one showing up. When the big buyers show up, it's called a V bottom. So the market comes down, bang, and they just start rolling. And you know, you hit the bottom and there's the floor. We've not seen that at all here. I will show you a mini V bottom. Here was a V bottom when the market came falling down, bang, right here, the buyers snapped it all the way back up in one day. They went from, let's say, 10.6 to 14,000. They took it up $3,500 in one day. Well, we hit a swarm of buyers there, that's for sure. Buyers have attempted to mount offensives and have failed. And now we're down here defending this 10,000 line. They've defended it once, twice, 3 times, and now today we're hitting it a 4th time. What does that mean? The sellers really want to get under this $10,000 line. If they do that, as I have mentioned, this is another series, but I've mentioned that we have a tell sign that the sellers want to hit 8,800. They really want to hit that. It's like handing off a baton to the next runner. The sellers coming down here are wanting to hit 88. On their way, we very well could hit 7,500. Anything under that is deep, deep wholesale territory. Now, let's get into the tell sign, because we're looking at it basically right here. When a market is going up or down, when a market goes up, the rhythm, of course, is up, down, up, down, up, down, right? And if we're going down, down, up, down, up, down, up. The key is, which way are we going? If everyone knew that, that's the billion-dollar question, right? Well, let me show you a tell sign where the big players are telling you what they intend to do. It doesn't always work. They don't always get their way. But I'm hoping your screen here shows what mine is. As a market, of course, we know now historically that this market did go up, and we know that it continued to go up. But right in here, we didn't know for sure what it was going to continue to do. Let's try to focus in on that. I'm going to come and bring it up here. So here, market jumps up, kind of pulls back a little, sideways, up. It's kind of pulling back here. It definitely pulls back to here, and then up again. And then now the red candles start. So with the red candles, what are we going to do? Are we going to come up and go lower, or are we going to turn around and go higher? Act like you don't know the future. So with a student, I may do this. Let's see if I can. I'm not sure that I can do this on my, no. I can do it on a Mac. I can move that thing around, but I can't force that here. Sorry about that. So let's just act like we don't know what's over here. I call this the channel play, and I have developed it over multiple years. It's a very very critical thing. I have the exact dollar entry on any chart, any market, any time frame. But I've had to develop it after thousands of hours of screen time, burn time, watching, drawing lines, and all of that. Okay, so first of all, we had this big run up, move down, run up, and then here we had this kind of a channel downward, run up. And then we had another channel downward and run up. Okay, what I'm going to do here, let me come over and grab a line. I just want to draw a line here. I'm going to draw a line from this high, not to this one, because another one came up and made it a little higher, right? So I want to draw that line from this high to this high. I'm going to draw another one here exactly like it. Now there are some plays out here, or there's some formats that will let you draw a channel, and we'll go ahead and do that in just a second. Let me just use this line. So this line technically mathematically shows the highs. And by the way, a lot of robots and AI is trading this, so they are looking at mathematics, not human intellect. So we got a high here, we've got a lower high right here, and we have a couple lows. If I took this line and just dropped it down here, we come down into a zone. We know there's a zone here where this thing could come down short of, right on it, or just a little bit below it. We'll do it another way. I'll draw you a channel. Okay, so we've got a channel here, and because of that big drop here, that's what the channel looks like. We see the price did not come all the way down, but this is the dream. What I call the dream is here or below. Anything outside of that channel line is a very, very sweet spot for me. If I accidentally find something that has come outside that channel line, I don't care what it is. Doesn't matter. I'll buy it. Because the chances are of it snapping up and coming all the way up and exiting the channel are very, very high. Now, this has a nuance, something that Bitcoin seems to always have, and that is the sell-offs are huge. They come down hard and they snap back up. Just like here's a hard down and a snap back up. Hard down, snap back up. We see it happen all the time because the buyers kind of back up and let that happen. What that does to this channel is it manipulates it. So knowing that, what I can do, sometimes I can move up and find another bottom here, another low, and just forget this first one. In this case, here's what happened. The thing came into the channel. We'll just forget this low. It bounced up, came down. As you see, it ended 1 day period right there. And then it dropped down under, and what a dream spot to buy Bitcoin right there, right? Because what happened? Rocket launch to the top. Now, how far do you want to go? I love to get outside the channel and then just take it off. And my risk, I usually try to risk about a 1/2 for a 3. It's about risking $1/2 to make 3, if that makes sense. So if it keeps on coming down, clearly this channel is forgotten and is not working, and I want to get out with a short loss, just a small loss. So kind of risk a 1/2 to make 1, 2, 3, something like that. And that's basically that's a real rough sketch. Sorry about that, but basically to make 3. And once my next thing is that once I enter this trade, if it rockets up, if I entered at the line or below the line, okay, and I bought, and it rockets up and it gets up here into the channel, I will immediately put a stop loss order above my entry. What is a stop loss order? That means if the price comes back down, stop, take me out. Okay, it's a stop order. And so if it comes back down, then the rocket launch I was thinking about didn't happen. And so basically, so I enter. When it rockets up, I put my loss, my stop order in, and if it comes back down, I make just a little bit of money. We'll call it a loss. I love my losers to make money. But if it does keep going, I can keep raising that stop loss just to capture more of the profit, and then I can put what's called a limit order in up on top, and put that limit up there, and then if it shoots up through that number, it limits me out. So a stop order says stop, take me out. A limit order says that's my limit, that's all I need, take me out. So this is a classic channel play. I've never heard anyone teach it before or how to enter it, but this is what I do, and this is what I've done for years. Let's keep looking, because once a market enters into a channel type of environment, it then it's getting into a beautiful rhythm play. Okay, here's another one, and you have to learn how to see these things. You can't just just start out and and see the channels. So here it enters up, here it hits a high, comes down, hits a low, comes up, hits the high, comes down just under the channel. Where's my entry? At or below. Bam, to the upside, right? What a beautiful play. Now, most people can't see this. You got to learn to see it. You have to have eyes to see, okay? And that's something that screen time, education, getting some professional help, spending time with a mentor, that'll do for you. Okay, look at this one. All right. Market enters the high channel. Bang, bang, and at or below, look at this. What a beautiful place to enter the market. Now this one came up, sat back down on the line, up, kind of sat back down. I mean, it's really struggling, and then there it goes, and it goes on up to hit whatever number that you wanted. So that channel was a little more sloppy, but it was a beautiful outside the line play there. Okay, so let's keep moving forward here with Bitcoin, and you see here's a high, here's a higher high. So we can't like really draw a channel that way. You always, when you come up, you draw your channels down. When you're coming down, you draw your channels up. A channel play means that the market is getting in the groove, it's getting in the rhythm. And now let's look at this. Let's just pick up to the big picture. Now, after this big move up, we've got this massive move down, and then we have what? A channel play. Down, 1, 2, 3, 4. Right up here at the top area was a perfect zone where the market was evening out and down, right? Okay, so the last big move down, what's happening now? It's kind of developing a channel play. I'm not sure, my personal thought is this is so weak it may not run all the way up, but just because we get a rally up, a lot of people say, oh, finally Bitcoin's on the move, we're going to go up and break new highs, and I say, hold it, it's down channel, down channel, down channel, until further notice, until the thing starts evening out. We'll see what happens there in the future, but that is the channel play. Let's take a look here at what else? We'll take a look at gold. Let's see if we can find anything here in gold. And this works on any time frame, any market, anywhere. It's technical trading. Okay, so let's see here. This poor thing, gold has been so manipulated. If you've ever heard of gold being manipulated, look at this. So we have, well, here's up, there's a nice down channel, here's moving up, here's a down channel, and then it fails. Here is a down channel, and it fails. As you can see, something outside of the ordinary is pushing a normal setup. It's pushing it out and destroying it. Here was another little channel, pushed down. Channel, pushed down. So and now here was a channel, okay, moving down, channel, down. Well, they're not going to have a problem letting you go down. So a channel built up for a down play is good. But what this tells me historically, looking at this daily chart, is that gold is being so manipulated, I could never trust this channel play on this thing, just looking historically. So before I try to enter, well, now, I'll tell you what, I could trust a channel play to the downside, because they've been pushing, whoever they are, has been pushing gold down. But if I look back historically and I see the failures of the channels over and over again, I'm not going to trust an upside channel until this thing clears itself and moves on to more normal rhythm. It's out of rhythm. Okay, so let's look at silver and just see what it's doing, because it kind of follows gold. And you can see the same thing. Move up, channel, failure. Move up, channel failure. Here is a channel down. Nice. So silver has been manipulated as well. I would not trust channel setups at this time until whoever they are gets their act together. Let's see, anything else here? Let's take a look at oil. Oil is kind of a good manipulated item, and as you can see, oil here back in 15, 16 hit its low, and then it's trying to recover, and man, since June of last year, it's been on a rip to the upside. Let's see if we've got anything here we can see. Okay, so we're moving up, and that is a okay channel. Here is a channel for sure that shot to the upside. Manipulated channel, bang to the downside. Here's another channel, bang to the downside. So oil being manipulated as well. Undoubtedly, if you know anything about the economy, the dollar, the oil, all of that. Remember now, a channel play comes up, down, that's its typical move. And down in this zone, inside, at, or outside, my favorite is outside if it'll get there. But that means that I miss some of them that come on the inside and turn around. But I like that outside play. Take the outside play, and I almost always get into a nice, favorable, positive trade. So, and then from there to the upside. Where do you take it off? Well, typically risk 1/2 to 1 to make 3. That's what you need to think about. Usually it's pretty safe to take let's say this last high, draw your line and just take it off right there. Don't look for new highs, because this channel play does not guarantee you a new high. It's only guarantee you a rocket launch from that lower line. So a downward movement, a down move, would end up coming up like this, an upward channel, right? Bang, 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 and enter short or sell what you got here for a move back down to the downside. Okay, here's Coca-Cola, and let's see if we can find any rhythm there. Wow, of course, you're seeing the chart's moving here, and then wow, what a bad day. Coca-Cola closes here and opens the next day there. Closes here, opens the next day there. Oh my, lots of drop-off. Coca-Cola, what have you done? Well, as we're moving back up now, we do see here's a beautiful channel play. Here's a nice channel play. Here's a down move, channel up, down move, channel up. And let's look right here at this last play, because this is pretty much live right now. Let's see if I can pull a channel. Let's go from the low to the higher low, and let's draw that. Check this out right here. Okay, so we've entered 1, 2, 2. I'm sorry, let me see here. Yeah. 1, 2, 3, and then 4. And then here we are. Look at this. Now, there's a reason for 2 days it has not successfully gotten over that channel. What I would do, if I was a trading man that happened to stumble on this little gold mine, I would short Coca-Cola right here, and I would short it. I would short it down to about that number right there. So 40.91 down to 38.50 could be a really nice gain in just days. Wow, what a find accidentally. Okay, now let's do this. Let's take Coca-Cola to just 1 hour candlesticks, okay? Because this works on every time frame, and if you are a day trader, and this is where I learned my day trading, then you will find, now move down. Matter of fact, let's just come down to a 10-minute chart. We're going to dial in 10 minutes. Each one of these candlesticks is worth only 10 minutes, okay? And let's come back just a little bit here to, let's see. Let's come back on these 10-minute charts and see if we can find anything in a smaller manner. Okay, so here's a move up. Is that a channel? Yes, it absolutely is. Here, 1, 2, 3, 4, bang, boom. Look at that. Now, if you're waiting on a daily chart, we saw the Coca-Cola opportunity, but would we're going to wait a long time waiting for Coca-Cola opportunities. 1, 2, 3, 4, 5, came up, would have given you some profit, and then if it dropped back here to the line one more time, you can take it one more time for the launch. Those are rules that we have to set in a 201, 301, 401 class. The actual rules of money management, managing your trade. Well, that was Coca-Cola, and we could go on and on. The channels show up everywhere and give you opportunities. Remember, this is education in nature only, and make sure you get professional help before you really ever put money out on any kind of market, and make sure that money you put on any market is money you can afford to lose. Thank you, and we'll look forward to seeing you again.